Thought I'd go back to basics this week, talking about business asset disposal relief, because this is quite topical following the budget because of the changes that are being made. So business asset disposal relief used to be called entrepreneurs relief, and basically if you qualify under the conditions, then you'll pay CGT at a flat rate of 10%. At the point that they renamed it to business asset disposal relief, they reduced the lifetime allowance from £10 million to £1 million. The types of things you can qualify for the 10% rate on are the sale of whole or part of a sole trade or partnership, personal assets used in a business, and the sale of shares in a company as long as it was a personal company. That's the main one I want to talk about because we do a lot of work with third-party sales, management buyouts, that kind of thing. And there is an opportunity to lock in 10% tax rates before the increase to 14% in April 25 if things progress quickly at least. So if you're disposing of shares in a company, you need to qualify under the following conditions. It needs to be a personal company, which means you need to hold at least 5% of the share capital. That's a little bit more complex. You need to hold 5% of the shares by nominal value. That was established in a case called Canada Safe way back in the 60s. We're not looking at the number of shares in issue, we're looking at the nominal value. So if you've got either a lot of preference shares, that can cause a serious issue to other shareholders. If you've got £1 shares and 1 penny shares, for example, in the share capital structure, you need to be careful that we're looking at the face value, the nominal value, not the number of shares. So we need to hold at least 5% by nominal value. We also need 5% of the voting rights, and we need 5% of either the capital or income distribution rights. We need to hold shares in either a holding company of a trading group or a trading company. Trading company basically means that it doesn't have, to a substantial extent, activities other than trading activities. That's the key word in the legislation, activities. As long as the activities, when viewed holistically, are trading in nature, then we will qualify. So we've got the 5% test, the trading test, and finally, the individual needs to be either an employee or office holder, so a director of the company. The conditions need to be satisfied for at least 2 years up to disposal. There is also another part of the legislation that says as long as you meet the conditions for 2 years up to the date the company ceases to trade, and you take a capital distribution within 3 years of that date, then you can still qualify for business asset disposal relief. So that is important. If the company, rather than selling the shares of the company, if someone comes along and just says we want the trade and assets, we don't want any potential historic liabilities, you would sell the trade and assets, you'd be left with a cash balance on the balance sheet, and then you would liquidate. So obviously the company ceased to trade at the point you've sold the trade and assets, so we now have a 3-year time window to liquidate. Why this is important now: on the 30th of October they announced that CGT rates are increasing to 18% for basic rate or gains falling within the basic rate band, and 24% for higher rate capital gains. They didn't, however, increase business asset disposal relief until the 6th of April 2025. So we're now in this state where we've got a 24% higher rate CGT versus a 10% business asset disposal relief. That means that business asset disposal relief with a lifetime allowance of £1 million is worth up to £140,000. Prior to the budget and increasing it, the CGT rates to 24, business asset disposal relief was worth £100,000. So there is potentially a £40,000 tax saving if a disposal is made by the 5th of April 2025. The BADR rates will increase to 14% at that point, and then a year later, 6th of April 26, they'll increase another 4% to 18%. So effectively they're phasing the increase over a couple of years until we get a business asset disposal relief rate aligned with the basic rate of CGT that's been announced. But just to note that time is running out if you want that 10% tax rate before it goes up in April next year. As always, like, comment, share. It lets me know that these videos are well received, and if you have any comments or interpretation of this legislation, really interested to hear everyone's thoughts.